Charlotte McLeod with the Investing News Network, and here today with me is James Kwantes, editor and publisher of Resource Opportunities. Thanks so much for being here today.
Thanks for having me, Charlotte.
Great, and we're here today at PDAC. It's the end of day 2. How is everything feeling to you? What news have you heard here? How's it looking?
Yeah. So I came in, it's day 1 for me. I came in last night.
All right.
And I missed last year, so it's less busy this year, right? Mm-hmm. I think the coronavirus kept a few people away, not to mention hammered all the stocks last week. Mm-hmm. So.
Yeah, tell me about last week. I've been asking a lot of people what happened. What's your take on what went on?
Well, just a lot of fear and fear of the unknown, I think. So I sent out a newsletter to subscribers, and I just focused on, cash is king, right? There's a lot of companies that raised money last year that are fully funded for 2020 with good projects, good management, and those are the types of companies that you want to own in this kind of market, because the market's kind of bounced back Friday for some companies and today as well, but maybe we're not out of the woods yet. So.
Right, and some people were a little bit confused to see markets going down or gold going down as well. Is that concerning for you, or did you find it okay?
Yeah, I think everything sells off in a circumstance like that. Yeah. It was similar in 2008, right? I'm
hearing a lot of comparisons to 2008, and I keep wondering, what does that mean? Does that mean we're heading towards another similar financial crisis situation right now? Or when people say that, do they mean something different?
I guess just the level of fear, just the level of fear and the unknown, what's going to happen in the U.S. with the coronavirus and things like that. But, you saw a real, it was interesting because, these companies, nothing's changed for them really, especially if they have money in the bank, gold in the ground, good projects. And they almost all sold off between 15 and 20%, especially towards the end of last week. So, that's a buying opportunity. Now, in order to buy, you need some cash, right? You need dry powder. But I think focusing on the good projects, in a sort of fear-based, call it contagion last week in the junior markets in mining as a whole, but particularly the juniors, focusing with companies with gold in the ground and cash, protected by the cash, should limit the downside. Mm-hmm. And the price you get in is very important for investing, right? Yeah. It's one of the few things you can control, especially in this sector. So if you can get great projects at a discount, which I did on Thursday and Friday.
So what are your tips for investors who just on staying calm and you've got your shopping list? How do you determine what price is the right price for you to buy at and not have regrets later, or you're too scared to jump in? How do you manage that for yourself?
Yeah, so last week I divided up my investments into kind of baskets of investments that are not so much affected by what was happening, and then which is a smaller basket. But some of the resource opportunities portfolio companies didn't really react at all to what was happening, and other ones just got hammered. So I lightened up on ones that have less kind of exposure to that kind of fear sell-off, and also ones that are a little more stable, where I expect I may be able to get back in. So I lightened up on those, and I bought ones, stocks that got hit, and then I think will bounce back pretty good.
Do you pay much attention to the gold price and what you're doing? Or are you just really looking at stocks and the qualities that you want to have? Basically, the question, I guess, would be, where do you see the gold price going, and does it matter to you? Or how much does it matter?
I focus on a few companies that have substantial amounts of gold in the ground. Mm-hmm. Great Bear Resources is one. Sure. That one got hammered late last week, so I added on that one. And then there's a couple other companies. One is Sabina Gold and Silver. Another one's Ascot Gold Resources. They're both northern Canadian producers. Lots of gold in the ground, high grade. So the gold price, in U.S. dollar terms, we're at 1,600. Canadian dollar terms, that's almost 2,200 Canadian. So good projects in Canada will gush cash at that level. So it's a really good, I think, buying opportunity because the economics, just on the gold price alone, what it's done in the last year, and a lot of these companies have studies with the gold price at $1,150, $1,200.
Right.
So that's makes a huge difference on the economics, and makes the Canadian projects pretty attractive.
Okay, so it sounds like you have kind of a mix of companies in your portfolio. I know those are only a few, but juniors, larger companies. Is there anything unifying that you look for when you're investing?
I look at share structure, quality management. What have they done in the past? How do they manage the share structure? People's obviously so important in this business. Skin in the game, and what price was the skin? Not seed shares, but are they buying the market? Are they buying placements? And so those are sort of the unifying ingredients. And I look for kind of special situations as well. So I've got a little coal royalty company that I've been covering for several years, and also a graphene company that's making some big advancements right now as well. So.
Okay, we'll come back to graphene.
Sure.
I wanted to ask if there's any news that you've had from the companies that you're covering here at PDAC. Are there any announcements you've noticed?
Yeah, sure. One was the Yukon government announced $71 million in funding for a couple of roads that will connect Fireweed Zinc's McMillan Pass project. So that's that was one of the knocks on McMillan Pass. It's very large. Teck is a major 9% shareholder. So it's very large, very high grade, excellent economics. But the road funding for the road makes up about $100 million of their capex. So this road funding is a huge boost. The stock was halted today. It should respond positively, I think.
Okay.
And that's kind of I usually go up to the Yukon in the summer. And the level of government support and collaboration is really exceptional up there. It's a really cooperative approach, and this announcement today is an example of that.
Okay, good. Let's go back to the graphene. I will admit I'm a little bit of a graphene skeptic. It always sounds too good to be true to me. So tell me what you're looking at in that space and how it's progressing, and why should we believe?
Sure. So graphene, was discovered several years ago in the University of Manchester. The two guys who discovered it with Nobel Prize and so on. But it's kind of a science experiment, right? Like it has all these amazing qualities: strength, flexibility, everything. It conducts heat and electricity better than copper. So, but how does it affect? How will companies use it? So I cover a company called NanoExplore, and they're building a plant in Quebec. And it's going to be the largest plant in the world, and I think they're finishing it right about now. So what they are doing is dramatically reducing the cost of the graphene that they can produce. They can still do it and make money at it, but they're going for large bulk applications, like large scale. They have a product called Graphene Black that's a replacement for carbon black, which is a major rubber ingredient for tires, for example, make tires longer lasting. But they're going sort of for these like pipelines, these large kind of unsexy applications, but huge markets, and going for scale. And one of their major shareholders, Martin Ray, which is a Canadian auto parts manufacturer.
Okay, all right.
And so NanoExplore also, the thing about graphene is you can blend it with other materials. So NanoExplore already has contracts with some very blue chip companies. And so they plan to expand those as well. And they're also doing battery technology work as well. But they're focusing on, one of the knocks on graphene is the cost of it. It's very expensive to produce.
The cost and the mass production aspect, which I think is very difficult.
Yeah, so they're building a 4,000 ton plant, 4,000 tons a year in Montreal. And they plan to expand that to 10,000 tons a year from cash flow once they get up and going. So they're kind of reaching a critical point. I think the plant is just about finished now. They'll be commissioning it. So after PDAC is finished, I'm going to actually take the train to Montreal, where it's based, and have a little look around, meet the CEO. So I've talked to him on the phone, but haven't met him yet. Okay. He owns about 10% of the company.
We'll have to get an update and see
how
does it go. Yeah. Okay, so that's good. I want to ask, are there any other major themes that you see developing in the resource sector for this year? I know we've had a few things so far this year that have come up, the most recent one being the coronavirus. Do you think that's going to be a long-term thing? If not, what long-term themes do you see developing?
Yeah, I mean, I'm very positive about the gold price and the gold fundamentals. I think the coronavirus can only, be another tailwind for gold. I think if governments keep printing money or trying to stimulate the economy, we'll see how it shakes out. So what the juniors are, the juniors haven't moved yet, so there's some skepticism. But one of the things that I noticed when the Leah Gold and Equinox announced that they were merging, back in December, the gold price has come up, a bit since then. But I tweeted that day that I like this. I own Leah Gold shares, so I like this merger, even though there's no premium, right? It's just a combination. And both of those stocks, they got hit last week along with everything else. But both of those have been on a tear, since that time. So to me, that was one indicator that this gold market is real, and that the developers and eventually the juniors will start to move.
Great. Yeah. All right, I think we'll leave it there. That was great. Thanks so much for coming.
Great, thanks for having me.
Thanks. Once again, I'm Charlotte McLeod with the Investing News Network, and this is James Kwantes of Resource Opportunities.